Hi, and welcome to the Stockscores Market Minutes for April 4th, 2014. I will be in the Vancouver and Surrey areas April 12th and 15th for my presentation, The 8 Rules for Successful Investing. If you register and attend one of those presentations, you will receive my book, The Mindless Investor, free, courtesy of Disnat. Now, if you're unable to make it out to one of those presentations, I will also be doing a live webinar on April 17th. For details and to register for any of these events, go to stockscores.com/register. Now this week I want to talk about time frame confirmation. The more groups of traders you have on your side, the greater your chance of success. And we can tell what each group of traders are doing by looking at different time frames in the chart. The day traders will focus on 2-minute, 5-minute, maybe even 15-minute charts. The swing traders, 30-minute, 13-minute, hourly charts. The position traders, daily charts. And the longer term traders, weekly or even monthly charts. And as I said, the more that these groups are on your side, the better your chance of success. Now at the top of every Stockscores chart, there are some fast links that allow you to change the look back period, but also the time frame. So if we jump over to Stockscores, you can see here, I've got a chart up of Surge Energy on a 15-day, 30-minute chart. You can see that this morning, the stock started to erupt with some buying pressure and looked okay. Now when I go look at the daily chart going back 6 months, simply by clicking on the 6-month link, now I see that not only is the intraday chart showing some strength, but I can also see that the downward trend line on the daily chart is being broken. Now if I want to look at big picture, I can click on the 3-year link right here, and that will be a weekly link, and now I can see that it is breaking in a longer term trend. We've had a pullback for a few months, and it's looking like it is now ready to resume its long-term upward trend. All you have to do this sort of thing is just click on the fast links and zoom in on the time frame and interval that you like to use. It's something I do on every market scan when I am looking at stocks that look pretty good. All right, let's get into the market analysis. We've had 5 or 6 weeks of sideways trading, and it's made trading a little bit difficult. And I think for a lot of traders, they think that we are on the edge of a major breakdown in the market. And yet that is not supported by the weekly chart of the S&P 500. Yes, it's been a boring market. You've seen pullbacks in some of the high-flying sectors like biotech, but big picture in the chart of the S&P 500, the long-term upward trend is still in place. And really what's happening right now is the market is moving back to that upward trend. Now if you look in January of 2014, we had a pullback that took the prices back to that upward trend. Instead of a pullback, which happened over the course of 2 or 3 weeks, we're getting this 6-week sideways trading, which is accomplishing the same thing, getting prices back to the upward trend line. And once price hits the upward trend line, as it did in October and July and June, you ultimately will get that bounce and the reignition of buyer interest. The motivations for the buyers will come back. Now, of course, we could still break that upward trend line, and if that happens, then we have to get bearish. But for now, the bull trend continues, and so we should remain optimistic, although recognize that this sideways trading does make trading action a little bit boring. Similar situation in the TSX. We've got a few weeks of sideways trading in that upward trend. The difference in the Canadian market is that you're seeing money rotate out of some of the high-flying areas, like let's say some of the banking stocks or some of the technology names on the Canadian market, and moving into the sectors that really lagged for the last few years, particularly energy and to some extent the mining market. So you're actually seeing a little more action in the Canadian market because it's heavily concentrated with the sectors that the market is rotating into, most noteworthy that being energy. Canadian market is bullish in the longer term sense. I would say neutral in the short term sense because of that sideways trading, but there are good pockets of strength in the Canadian market that you can take advantage of. The TSX venture market, which is the junior market, pretty big sell-off 2 weeks ago, holding support right now and trying to bounce. We had a little bit of a bounce back so far this week. Big picture, we're still in the very early stages of a turnaround here, which means it's going to take time for momentum to build. And it's ultimately, if it can build, it's got lots of upside potential. But it's still far from certain that it is going to go into that longer term upward trend because we've only had a few months of buyer interest in this market. That hasn't really built the momentum that we'd like to see in a market. I like to show this chart because it's one that has captured the money from many speculators. The biotech sector has been the hottest sector this year and really over the last couple of years, but it has this week broken its steepest upward trend line, which I draw there in red. Now, last week it was right at the trend line, and for most of this week it held that trend line and actually looked like it might hold it. But on Friday, the sellers came back into the biotechs, broke that upward trend line, and so my expectation now is that it will fall to the shallower upward trend line, round about $215 on the IBB ETF. Either way, the sellers are in control in the short term right now, but the long-term trend still remains up. TLT, which is the Treasuries, is always an interesting chart because there are so many reasons why bond yields in the US should be going up, and yet they're not. Keep in mind, anytime you look at a price of a bond, if it's going up in price, that means yields are going down. And the trend over the last 3 months in Treasuries, US Treasuries, has been up. Now, the market tried to move to new highs this week, or new local highs, and it failed to do that. So we may still break that upward trend line, which I have drawn in green. And if that is the case, then you are really getting indication from the market that interest rates will go higher and bond prices will go lower. But that hasn't happened yet. And so for now, we've got a little bit of a conundrum because everyone is calling for higher interest rates as the US Fed stops its stimulus, and yet the Treasury bond market really isn't supporting that argument just yet. US dollar trying to break its downward trend line. It's flirting with that downward trend line very closely right now. Something to watch, but still a considerable amount of overhead for the US dollar to have to work through. I'm not really expecting great things for the US dollar. I just think that there's a lot of pessimism surrounding it, and it's going to take time to overcome that. The gold market held some support this week. On Friday, it actually had a pretty good jump higher and broke the 2-week pullback that we had seen in gold, and that has helped a lot of the gold stocks, which we were hot on earlier this year. They're now starting to base and turn higher again. So an interesting chart here. You can see that it closed green for the week, which means it closed above its open. And if that can hold, if we can hold that little support, we could see gold move back toward the 135 price on the GLD ETF. Oil remains in that pennant pattern. Oil's been up for the last few weeks, but most noteworthy is the strength in the energy sector, and largely because of natural gas prices, which have done well. But certainly investors are rotating out of some of these high-flying sectors and coming into the energy sector, even though oil prices themselves haven't shown a lot of excitement. Fear really still pretty complacent in the market. We did have a jump up in the VXX on Friday. Doesn't really show up a lot in this chart, so it's just a minor little blip of fear, but something to keep an eye on. Obviously, with some selling pressure in the stock market on Friday, it could turn into something bigger, but for now, it's really not yet a concern. So my outlook for US and Canadian stocks remains bullish long term, but neutral short term. We are grinding our way sideways, getting back to that trend line. I've upgraded my neutral, or my rating on gold, from bearish in the short term to neutral because we did bounce this week. So I'm neutral on both time frames, and longer term neutral on oil, short term bullish on oil. The long term trend remains up, but 6 weeks of sideways trading has made trading boring lately. You probably don't need me to tell you that. The equity indexes are approaching the upward trend line where the buyers should find some motivation again. Gold is working to rebound from recent profit taking and could resume the strength of earlier in 2014. Well, that's been the Stockscores Market Minutes for April 4th, 2014. Have a great week in the market and trade well.